Hi guys, welcome back to our daily market analysis. Let's get started. So today Nifty is down by 2%. So today was budget day and a lot of things happening. I'll give you a lot of information that what are the major reforms that were not at all good for the economy in general, and I think STT got increased. So there's something called security transaction tax that government of India charges for every futures and options that you do trading in. So the from in futures it has increased from 0.02 percentage to 0.05 percentage, and for options, I guess, yeah, in options I was reading it is increased from I think 0.01 percentage to from 0.01 percentage to 0.015 percentage. So that's a major shift. Why this is a concern for stock markets? You have to understand something, that our derivatives market is much more larger than our whatever is the the equity market is. So derivative markets consist of futures and options, and they drive a lot of volumes to all the exchanges, brokers, and you can see the impact of it. Then MCX is down by, let's say, 11 percentage. When it fell down, it went to like 18 percentage. It went to like 18 percentage down. BSC is down by 7.83 percentage. It was down almost 10 percentage when actually the news came out to be. But that all the major brokerage firm will be able to understand that all of them saw a decrease in their share price, because as the taxes will be more. There's a overall thing that government is focusing on is to reduce speculation, but there's something called policy tightening at too much levels. People will actually not interested in the Indian markets at all doing futures and options trading. That is bad for overall ecosystem, because that's not only for the futures and options. People are just going to ignore the kind of equity market that India also has. There was no substantial foreign incentive for in order to increase FDIs in India. How we've been seeing it, right, on sensible, that if you look at the FII data cash history from a very long time on a monthly basis, from this year, last year combined, they sold lakhs of crores, almost 1.5 lakh crores wiped out of Indian equities just last year. Why all of this selling is happening, even though there is a lot of negativity around tariffs in the US tariffs, and a lot of trade, like the trade surplus that we used to enjoy while trading with US, we are going to lose all of. First of all, we are losing all of it, and there's no step that government of India is taking in order to incentivize foreign investors to invest in India. There's no major policy that this budget. So that's why this overall, you could see that the markets were down. I'll just try to understand what's happening onto the this daily market analysis. What did we actually write on 30th of January? Nifty gave negative returns this month, in the month of January, and it is still holding on to it'll hold on to the 25,000 level, and 25,500 is acting as a resistance. Bank Nifty gave flat monthly closing, indicates that Bank Nifty sector in general is strong. But today actually we saw that major banking stocks also did got hit, but that's not going to impact their whatever performance. That's what my verdict or thing is telling me so deeply, that it's not going to hurt banking as much as it's going to hurt the financial services companies. Yeah. So without further actually talking about it, 24,900 is acting as a support. So this 24,900 support, whatever was seen as a put writing opportunity, market actually went down till like 24,800. So you could actually understand that there was no major support from 25 almost 25,300 to 24,900, and it gave that much dip. So OI data just tells us that where exactly is going to be the next support or resistance and stuff. And FII and Pro were bearish on markets, even though they bought some sort of stocks that was speculative purpose. But FII sold 1,300 crores in futures. They would have made a lot of money, by the way, right? Because the market is down by like 500 points. If you're able to understand that they've sold like 1,300 crores in futures, So how much the return is going to be? First of all, the position itself is leveraged, so they're not just making like 2% return on their overall investments. If you are able to understand this, why is it the case? Because like as I told, you get some sort of margin when you're doing option futures trading with the hedged position and like put options. Same contract of 2 lakh is going to cost you, less like 1.5 lakhs, 1.4 lakhs, 1.3 lakhs, somewhere down the line, and you are going to benefit. First of all, they got it right that the market is going to go down, and so is the importance of data comes up, that we should analyze all this data in order to actually just think about markets much deeper, that what is actually happening into Indian equity space. Chalo. So without further discussing, let's start our analysis. I'll start my analysis. Right. So 24,600 looks like it's going to come. I've been telling it from a very long time, but sooner than actually today. Did it come today? Yes, actually it took support at 24,600. But it doesn't look like it's very tricky to actually tell this, that will it stop till like 24,600 or there's more downside left. But you're able to understand this like it's acting as a critical level, and we saw this particular fall down in the start of this month as well, right? Last month it already gave a negative closing. This month already it's down by 2%. 24,600 is acting as a support on a chart level. 24,600 is a support, and like rejection is 25,500. Still, there's a very big range. 25,500 is acting as a resistance. We'll look at Bank Nifty as well. I left that. Yeah. Again, tried like it was into this particular zone, and it was very much tricky the day before as well, on 30th of January, when I was trying to analyze it, that why this zone it's not able to cross it and it's holding this. 57,600 again is acting as a support, and now 59,600 is a clear resistance. 59,600 resistance, and was like 57,600 is 57,600. But big bearish candles, as you can see from the chart as well. Let's try to analyze what's happening into the option chain. So 25,000 acting as a resistance, as you can clearly see. The 25,500, that does look like from the chart, but from the OI levels you can clearly see this 77 lakh call writing on 25,000, and there's put unwinding of almost 20 lakh contracts. So you can pretty much see that the 25,000 is acting as a big resistance. The worry is that there's no major support that is getting formed on any down levels. That is something that you have to look forward to. Maybe it will hold 24/7, but early signs of support at 24,400. Yeah, I think 24,400 till this expiry it should hover around 24,600. That's just like 2 days. So option chain, major resistance at 25,000. Nothing else it tells. There's no major support that you can clearly see. 0.4, that's a lot bearish, guys. 0.4 I think we did not see till this time. 0.4 bearish. Let's try to look at what is happening to the options data. As you can understand that FII and Pro, they did some sort of call writing, and they did put buying, and then they were actually right, and the markets did fall, right? So most of the time you will see that FII and Pro is correct and the client is wrong. FII sold 1.25 lakh call options, bought 60,000 put options. Pro sold 1.8 lakhs call option, so bought like 94,000 put options. Client bought 3 lakh call options and sold 1.8 lakh put options. this is the first time that I'm seeing both of them are FI and Pro are like mega bullish, no mega bearish on this. They're forming such big positions in call writing that it's totally understandable that the markets are going to go down. As always, our star player client is bullish. Overall, I don't have to even talk about it. I think it's pretty much understandable till now that and they're increasing their future sell position from 1.9 lakhs to 2.03 lakhs. So they sold like 1500 crores in futures today. If I sold 1500 crores in futures, what's happening into the FIS3 cash market? FIS sold on a daily basis, they sold 600 crores in stock today. Majority of the world markets are today they are closed, so I think the world verdict is kind of similar that that majority of the stock markets are still holding on to their levels, but not our market. DXY surprisingly it's going up, and that's why majority of the gold and silver is so massive correction. Silver today was down by like 9% again. It's at like 2,65,000. Next sort of support is at like 254. I've been telling it from a very long time, and now finally the support is going to test the support. And yes, BTC is breaking all its very important support levels, and looks like it's going to discount a lot, and then it's going to give some sort of opportunity. The world is running away from the riskier assets, and that's what the chart largely tell us. But Bitcoin discounting at the same time when gold and silver are also falling down. It's pretty interesting that they're not putting money onto the safe side, they're not putting money onto the riskier side. So where exactly they're putting money? Simple answer: the money is getting into US 10-year bonds. The bond, like it's going to go up. Looks like you can see the structure as well. The US 10-year bonds look much more stronger. The TLT EDV TLT EDV are kind of down. It's like, this is interesting. The bonds show a structure that is towards the upside, but the ones on TLT EDV backing it doesn't look the same. The 10-year yield is also going up, so that this is going to be tricky. But if the theory is basically, if BTC is also getting discounted and gold and silver looks like to the world that they are kind of riskier, the money has to flow towards the US government bonds. But at this time, majority of the countries are not believing in the US story, and they're not purchasing bonds. So maybe it will go into other emerging markets. Japan is like, okay, still emerging. Europe, Japan, China, they are not emerging markets, sort of developed nations, but you're getting my gist, right? Indonesia, Malaysia, Thailand, these are the markets that are going to see much more upside in the coming days, in the coming year, so to say. Because if the world is going to lose its interest from all these particular assets, they look risky and stuff, the money has to flow into equity markets. It was very sad to see budget that there was no major reforms to actually bring back the FDIs. But yeah, that is what the reality is, and there's no major rally that you can see, or either I can see in the stock markets in the coming days. That is it for today. Thank you so much for watching. Good night. Keep your capital safe, and I'll take a goodbye. Bye.